Hello and welcome to another update video about Bitcoin. So Bitcoin, the primary scenario, which is the bearish one, remains further in the focus. There are certain levels that need to be broken that would make a bearish scenario less likely. But for now, we remain in the bearish one. In the last video, I showed you, and also the Telegram channel members, I showed yesterday here the descending trend line, which is of relevance. Therefore, for confirmation that we are not in the bearish scenario anymore, at least the first indication, the real confirmation comes a bit higher, but the first indication that we are not in the bearish scenario anymore, at least not in this imminent sell-off scenario, would be a substantial breakout above the 20.4K level. Now 20.4K, you can see we had resistance here. Let me put that on the chart. We had resistance here, we had resistance here, here as well, and here as well. Now I mentioned yesterday the 20.4K level breakout would be very important for a first indication that we're heading further to the upside. That didn't happen. All we did is basically we had a small wick above that level. That is not a substantial breakout. If we're talking about a substantial breakout, what you need to do, you need to go higher, you retest it from above, and then you move up. That would be called a substantial breakout, but we didn't do it. The retest basically failed. We dropped back into that. We could even call it a triangle pattern here, trend continuation pattern to the downside. We have here in this wave down, which is a fifth wave. We have possibly already completed the first wave down here, which is the red one here at $18,600 nearly. We moved up in a wave two. That's how we can see this at 21K. Then we came down in we might now be in this third wave actually, in yellow. That third wave, however, would now need to be followed by a sell-off. I mean, in this third wave, in the third wave in red, we have a 1, 2 already complete possibly, and we should start now the third wave to the downside. It would need to be a strong move down. At the moment, the market is still not really, or has still not decided really what's going to happen here. Critical to understand is that this next move down, good indication or even first evidence that this is happening would be, first of all, a move below critical previous support that is here at 19.8K, then 19.3K, and then I think last final confirmation that we really are in a third wave to the downside would be the breakout below 18.6K. This is relevant. At the moment, you can even see here something like a triangle within a triangle. So you could even call this here a smaller triangle, but we are getting into the apex, so a breakout is imminent, I would say. So some kind of a larger movement should happen imminently. You can see that here on the hourly chart as well. Volume has been declining. The market today hasn't really moved. And based on the bearish scenario, we would expect the price to move further down. But that is the bearish one. Even if it breaks out to the upside from here, and that is what we need to say clearly, even if it goes to the upside, and you should always make your decisions after a breakout has occurred, nobody knows if this breakout is going down or up, but even if we go higher here, we could, and until we go above that 21.9K level, this could all still be a wave 2. Even if we move a bit higher, all that would need to happen is that we would then say, okay, wave 2 in red hasn't finished yet. Because we cannot, in this yellow wave 2, we cannot go above the red wave 2 here. If we do that, then it would just mean that this smaller subwave hasn't occurred and that we're still in the higher level wave. It would not invalidate the bearish scenario until we really go above 21.9K. That is just something to make you aware. Someone asked me by email, so hopefully you're watching this video. Someone asked me, is there a rule that here in this wave count, this yellow wave one needs to go below the red wave one? No, that is not the case. There is no such rule like that. That is purely a subwave of the higher level wave 3. There are price targets for the wave 3, not for the wave 1. There is no such rule. The wave 1 in yellow here can be shorter than the red wave 1. Absolutely, there is no such rule. So interesting here in an apex, so keep your eyes open for a breakout. In the bullish scenario, that is all still very much valid at the moment. In this one, as I said before, we could have had here in this wave 2 just a wave 1. In this wave 2, just the wave A down, the wave B to the upside, and now we would get a wave C to the downside. Would all be still very valid. That could, without surprise, again touch the support line here, the ascending trend line. Yeah, this would all still be very much in line with its scenario. It would, however, be sort of invalidated. This imminent scenario would be invalidated if we go below the low of that wave 2 here in brackets at 19.3k. Then if we go below that low, yeah, it could still then count as a bullish one. Again, then we would need to go to the higher level one, and it just would look messy again. And all of that, what is happening here in the bullish scenario, all these, we had a few invalidations, we have a lot of overlaps. All that is just not very convincing for an uptrending scenario. I'm following this here, yeah, as I said before, because there is a real chance we are working on a breakout. But again, until we see a clearer impulse here to the upside, and until we really break above the 21.7k level, yeah, this range, actually I need to move it a bit higher, as we just saw in the bearish scenario. It would need to go up to 21.9k, because we've got a bit of a wick here to the upside as well, and break above that level substantially. Even better, the 23.3k level. We have to understand that there is a high risk. This is only a corrective wave pattern, and actually the bearish scenario is going to work out. Now, I do expect a recovery. Absolutely, I do expect a rally above these levels here. But primarily, I would say this rally obviously can occur, and it will get much higher, more likely above 21.9 and 23.3k. But I primarily expect the longer route, that we go down first and then have that rally. There is just not enough strength at the moment in the market. The price action just doesn't justify at the moment to make the bullish wave count the primary scenario. And very interestingly here, that we are still stuck in this triangle. So keep an eye on that. We have not yet broken critical resistance here. It might happen today, yeah, and I remain of the view that we might have a decision here how we carry on today. But larger movements, yeah, because we're also getting closer to the 13th of July when we'll see the updated inflation data. You know what? Maybe larger updates we're not going to see, or larger price movements we're not going to see until then. Unless we see, like last time, some rumors again. Last time we obviously had the rumors that we would see the 75 basis point increase, that it is what we said, what we saw eventually, but the Fed has already announced that they're looking at something between 50 and 75. So we're going to see an interest rate increase as well in the next Fed meeting, probably in addition to that. So I think that might already be priced into a certain degree. Okay. That's my current view here. Not much happened since the last video, but hopefully you still know where we are and which are the invalidation points, and from which point we would expect a price increase. Unfortunately, at the moment, a little bit of a boring movement. Yesterday we saw a bit of volatility, but overall, on the larger, in the bigger picture here, just sideways movement for now. Okay, so hopefully you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then check out the channel membership. Thanks a lot for watching. Bye-bye.